This is an egalitarian, democratic, global, homogenous asset class.
Yeah.
And it's the biggest trending asset class of all time.
Yeah.
So given that, it's pretty easy. It's just buy it and hold it. But firstly, you have to deal with your own psychology. I'm down, I'm up, I FOMO, my friend made 100x, all of this shit, right? You need to stop all of that. And then you need to not use leverage.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and other crypto according to Raoul Pal. Let's take a step back and consider this. This is the largest macro trade ever made, and it's the greatest performing deal ever, asset class in all of history in the shortest amount of time. Hence, you have the gift he had rather not here. Does anyone claim that we have been excluded since everyone can invest 10% in each other? Indeed, you can deduct 10% of your earnings if you live in the Philippines, Nigeria, or New York City. This is a globally homogeneous, democratic, egalitarian asset class, considering that it's the most popular asset class of all time. It's quite simple, just buy it and hold it. But you must first deal with the psychology yourself. Then, if you want to win the game, you must refrain from using leverage from $2 trillion to $1 trillion to $200 trillion in tokens. When there's a complete mature asset class in the game, you must hang on to your tokens and not give them away. Someone else an attack vector to remove your tokens from you, thus in the event that you don't borrow against your ability to exercise self-custody, considering that someone will steal your tokens, similar to don't do stupid things with the greatest chance ever presented, and lots of things Raoul Pal discussed. So please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
Look, it's really important, right? So step back. This is the biggest macro trade of all time. It's the best performing asset class in all history in the shortest period of time, right? So you have the gift. I don't want to hear anybody say we've been shut out, because everybody can put 10% in. Everybody, right? If you live in the Philippines or you live in Nigeria or you live in New York City, you can put 10% of your wages in. Right, so this is an egalitarian, democratic, global, homogenous asset class. Yeah. And it's the biggest trending asset class of all time. Yeah. So given that, it's pretty easy. It's just buy it and hold it. But firstly, you have to deal with your own psychology. I'm down, I'm up, I FOMO, my friend made 100x, all of this shit, right? You need to stop all of that. And then you need to not use leverage. Because if the game is to hold onto your tokens from $2 trillion to $10 trillion to $200 trillion when it's a full mature asset class, the game is to keep hold of your tokens. Don't give anybody an attack vector to take your tokens off you. Yep. Which is why if you can self-custody, better. Certainly don't borrow against it because somebody will take your tokens. It's just don't do dumb shit when given the biggest opportunity of all time. If the bloody asset class is going to go up another 100x from here, you honestly don't need to use leverage. You don't need to spend your whole time looking for the next 100x token and stick all your money and hopes and dreams in that. Just put 90% in the main asset classes and it'll do fine. You know, a bunch of it is degens, I'm just going to get a 5x leverage, whatever, get washed out. Yep. Most of them are not putting their life savings. They're just trading. There's also a bunch of hedge funds, short-term people, there's market makers, there's all sorts of participants, but actually crypto markets aren't that deep. Yeah. What's also good is they're quite Austrian in how they work because, the creative destruction cycle is all the time there, right? Because the margin gets called immediately. Yeah. There's no negotiation. It just gets called and you're stopped out and it's done.
Right. Yeah. It's
the only thing we get with it where it wrong was when there's hidden leverage. And I've learned this in the past, is when you go around and ask everybody who's your biggest client, if it's all the same person, then you've got a problem, particularly if they're using leverage. Long-term capital management was the classic example of that. I was on a stag weekend in Kilkenny, Ireland, and I was at NatWest at the time running the equity derivative desk. and a bunch of my friends were in equity derivatives and fixed income derivatives, and we were just having a few beers, and the conversation comes up: who's your biggest client? Long-term capital. How much have you got? Oh, $1.5 billion in equity derivatives. I'm like, okay. What have you got? Oh, we've got, $1 billion. We had like $3 billion because clearly I was a better salesman, so obviously we had bigger positions. But then we went round. There's like, okay, we've got just between us lot on the boat, of which 4 or 5 people, we had maybe in equity derivatives alone, we probably had 5 times the value of the fund. I'm like, interesting. Then I spoke to a friend of mine who was the head of Bund trading at Deutsche Bank.
Yeah.
I'm like, how much you got? Goes, 50 billion. I'm like, holy shit. I went back to the risk manager on the Monday morning, hungover and tired, and said, listen, we've got to get out of this stuff. This is a disaster. But it happened again. It was actually 3 Arrows Capital. Yeah. None of us knew it. All of the CFI projects had one client that was providing all the liquidity. And then when that client went, it all went. And we couldn't see that on chain.
Raoul Pal is simply going to leverage 5 times, no matter what. Many individuals seem to be trading without investing their life savings. While there are also hedge funds and short-term traders in the mix, there are market makers present in the market. There are various participants in the crypto markets, but they are not as deep as you might think. It's impressive how they operate, following a similar approach to the creative destruction cycle, often seen in Austrian economics, always on point because the margin is called without any room for negotiation. It's a direct call. You were stopped out, and it's over. The only mistake we made was due to hidden leverage. Raoul have learned in the past that going around and asking everyone who their biggest client is can be helpful. If the same person is involved, it could be problematic, especially if they are utilizing leverage. Long-term capital management was involved in the situation. Here's a classic story about Raoul Pal. He was on a stag weekend in Kilkenny, Ireland, while he was in charge of the equity derivatives desk. Some of his friends were also involved in equity derivatives when discussing fixed income derivatives over a casual drink. The topic of long-term capital and major clients arises with over $1.5 billion in equity from the derived system. Raoul, consider the scenario where you have even more, $1 billion. We had around $3 billion because he was a more effective salesman, resulting in larger positions. Let's back to the Raoul Pal interview.
But contrary to whatever anybody says, I was never involved in it. So I never really got involved in that madness. Yeah. But you can just see the tipping point. Also, there's something weird. One of the reasons I set up Exponential Age Asset Management, which is my asset management company, fund of funds that invest in crypto hedge funds, is one of the problems of this market is there's very little secondary market professional liquidity. We have a bunch of trading shops.
Yep.
That's it. The rest is retail investors. The hedge fund industry in the entire crypto space is $5 billion. In traditional markets, it's $5 trillion. So we just don't have depth of market. So if you think what happened with Luna, once you start teasing apart who was trying to spoof whom, who was trying to bankrupt whom, between Binance, FTX, Luna, 3 Arrows,
it's like,
it's because there's not much capital in the space. Yeah. So it's actually capital starved, which is great because it means the returns are very high, but not great because it means volatility is insane.
And then ultimately, does that mean we need more liquidity in the crypto markets? So it's just entering more institutional or liquid capital, really, in essence.
Yeah, and look, it will bring down returns over time, but we're a long way from that. We've only got $4 billion in a $2 trillion asset class, $5 billion in a $2 trillion asset class. We don't need to worry about it for now. It's it'll just make the space better.
Right.
So how I'm thinking this through is we talked about this is the biggest macro trade of all time. We're still in the middle of it.
Yep.
So great, focus. Yes, you should be involved in technology. You should be investing, if even just to learn, right?
Yep.
Because the biggest change to mankind and society is underway. And crypto is just a part of it. That's just like the transaction, storage, value layer of the internet. That's just a part of the whole story. The bigger things are AI, robotics, genetic science, well, what that all unlocks, and energy. And this formula that I talk about is the GDP formula.
Yeah.
GDP formula is basically population growth plus productivity growth plus debt growth. Right? We stopped and blew up all debt growth in 2008. All debt growth now is just servicing of old debts. So really, the global economy, and particularly the developed world, has slowed down trend rate of GDP growth. Why? Because we've got an old, slow-growing population, and in many countries now shrinking. Italy, Japan, South Korea, Taiwan. I mean, they're all starting to shrink now. Okay, so you've got lower population growth supporting this large debt. So there's not enough money to pay for the debt, which is why the central banks print stuff. But over time, you need to change that equation. Because if not, we're not going to blow up, because for us to blow up, which is what everybody fears, the value of collateral has to go down a lot, which is what happened in 2008.
Yeah.
But we've learned this new trick: debase the currency and optically the collateral goes up, right? You cannot go bust in that environment. Nice. Yeah. Well, not on a societal level. So, okay, how the hell do we get out of this quagmire? Slow growth, aging population. And the answer is, well, firstly, population growth. But nobody wants to open immigration because wages haven't gone up in real terms. So the more immigrants, the less money there is to share in the economic pie. So people are like, no, we don't want that. So then comes AI. AI is infinite human knowledge. And it's going to get cheaper and cheaper and cheaper until it's water. So you scale knowledge at zero cost, which is the human brain, and above that, because that's where we're going. And then you've got the robots, which scales physical humans. So now we have infinite humans at an exponentially decreasing cost.
Yeah.
What the fuck does that mean to GDP? Next, productivity. Productivity is basically the output per kilojoule of energy.
Yeah.
If I look at UK electricity prices over the last 50 years, they're pretty stable. Sure, they're cyclical, but they're pretty stable.
Yeah.
So with EV technologies, geothermal, wind, all of the stuff that we're working on, we know that they don't scale enough yet, storage problems, other stuff, but we know they're going exponentially lower in price and they're rising in output. And then we've got nuclear and what we can do with nuclear technology. So we are going to halve and maybe halve again the cost of electricity in the next 10, 15 years. What is that going to do? Well, think of productivity. If technology goes down half, productivity's doubled. If it goes down half again, productivity's tripled. Yeah. So you're going to triple productivity while introducing infinite population. Okay. And again, I'm going to repeat because it's an important sentence. What the fuck does that mean?
Yeah.
Right. So I get to a problem that I get to 2030. My job has always been to live in the future. And I can't see what this is. This to me is an economic singularity where maybe all understanding of economies and economics completely breaks down. Now, I may not be right. It may not be 2030, maybe 2035, maybe 2020. I don't care. The point being is we are fast approaching this point. Okay. Also, we've got to understand that as AGI comes, and honestly, I think OpenAI have got AGI. I think they are using it to build their business and their models and their everything. Which is why 500 people can out-iterate everybody on Earth. Now, when everybody gets this, the speed of disruption is going to be like the meme coin cycle or the ICO cycle. What business lasts? Who gets disrupted by whom? How long do these disruptive cycles last? They could be hours, they could be days, they could be months, maybe a few years. We just don't know. We just don't know even what VC investing means in that environment. Do companies stay around long enough before they get disrupted? Or should they be tokenized so you can put money in and take money out on the time horizon that these businesses last? Because VC ain't going to work. What does it mean once we've got AGI? What does it mean for markets? Once we've got something that can pretty much process all of the data and all the understanding of markets and make investment decisions. What, is one person going to figure this out, become the richest person that ever lived? Or do they... people aren't thinking this stuff through. They keep talking about, well, it's going to replace jobs. They're missing the bigger picture. This is beyond our understanding of anything that we do. Okay, and it's wildly exciting and terrifying. We both agree. So what I'm suggesting is you have 6 years to make as much money as you can, because you have no understanding what the world is going to look like. And luckily, we've been given the gift of an opportunity, which is we can invest in technology, more so we can invest in crypto. But beyond that, I mean, what is an asset management business? What is this conversation? I'm already developing an AI that's my avatar that can speak. Well, in 3 years, I'm just going to put my avatar speaking to yours. I won't even be here.
According to Raoul Pal, you can easily spot the tipping point. Also, there's something peculiar. One of the reasons Raoul established Exponential Age Asset Management, Raoul Pal Asset Management Company, investing in a fund of funds that focuses on crypto hedge funds, poses a challenge in this market due to its volatility. We have limited liquidity in the secondary market with a variety of trading options. Stores, that's all we have left. Retail investors and the hedge fund industry in the entire crypto space. The value is $1 billion in traditional markets. Its 5 trillions are at play in the market, and the depth of the markets is crucial. Consider what occurred with Luna as an example. Who was attempting to deceive whom? Who was trying to cause financial ruin between Finance FTX, Luna, and 3 Arrows? Quite intriguing. Raoul understands it's due to the limited capital in the industry. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.